So
Hello, everybody. Welcome back. We all have made it through the Memorial Day weekend. We all are back in the office.
Yeah.
The base crew back. Keith, Kyle, Tyler, Lisa.
All
Lisa
here.
in the hosting seat today again. So be nice to me, guys. Thank you.
Yeah, the other reason I just said you have to be nice to you is our executive producer, Lisa, is going to be, self-proclaimed executive producer, is going to be gone for a couple of weeks. So
yeah, I go on an Aperol Spritz research trip.
Oh, good for you. 2
Let's call
weeks
it
back
that way.
to the homeland, huh?
Yes.
Good for you.
So I thought we start again because I think that format worked really well the last couple of episodes. Two truth and a lie. Tell you the truth and you tell me what the lie is. I hope nobody cheated.
I didn't.
Okay, that's good. So first one is 57 because it's episode 57 today. Can you believe? Oh. 57 is the international country code, phone code for Argentina. The S&P 500 contained only 90 stocks before 1957. And C, 57 is the number of laps of the Bahrain Grand Prix. Kyle and Tyler need to know that one.
Yeah, they're the F1.
If that's a lie or truth.
I'm going to let one of these two guys go first before me, at least.
I think we should go last.
Yeah,
okay,
I'll
good point. Well, I have no clue on any of these, to tell you the truth. These are very
Then
tricky.
I did a good job.
You did. So I'll start with B. S&P 500 contains 90 stocks before 1957. That sounds legit. I'm going, that's true. 57 is the number of laps in the Grand Prix. I have no idea. That's such an odd number, but such an odd sport. I'm going to say that's true. And then international country code for Argentina, 57. I'm going to say that's false just by my reason of deduction. Keeping it simple.
Mm-hmm. Tyler?
I know the S&P was different before the 60s, which is why whenever we do data back, we stop at like the 60s pretty much. And I know it's also you stop before post-war as well. But so I think that one's fine. 57. So they do 57 laps or whatever it is, just based on the distance and time to keep all the Grand Prix a similar time format, right? So every race is a different number of laps because it's going to take you longer in the Monaco, or it's going to be faster in Monaco Grand Prix because there was 78 laps.
Mm-hmm. Is that the one last weekend or coming up?
Yep,
last weekend.
Spain is this weekend.
Sorry, guys.
So for
get with,
I mean, I don't know if it's 57 exactly because Bahrain is usually the first race of the year. Well, it wasn't this year, but past years it has been. So it's done and gone. But I would say that's probably true. I would guess.
Oh boy.
So I'm going with A.
All right.
Kyle?
Yeah. Bahrain was number 5 this year. Was 57 laps.
Who knows that?
Well, we know who the super F1 fan is versus the fake
mediocre.
Oh, there's a new bully relationship coming up. I feel.
Let's see here. I don't know, but yeah, B seems. I think Tyler's right on the money on that one. 60s are where the data kind of stops in terms of where you kind of normalize stuff. I'm gonna go with A as well.
So 3 A's.
Mm-hmm.
Are we all wrong?
I'm busted, unfortunately.
Wow.
57 is the county phone code for Colombia, not Argentina. But everything else is correct.
Yeah. What is Argentina's?
I don't know.
Oh,
not 57.
I just took another Latin American country that I have one line in there.
Good for you. That was a great one.
Yeah. So let's ease into our topic today. And for the wait what topic, I thought we talk a little bit about the changing change in the US. the penny is gone or will be gone and phased out in 2026. And then there will be no more 1 cent denominational coins anymore. How are we feeling about that? I mean, maybe I
There'll
should
still
say,
be a 1 cent coin. It's just they're not minting anymore, right? So
Right,
the
so
ones
they
that
are
are existing,
still-
they're not going to come to your house and rob your piggy banks and give you $14
but it's like
for
at
your.
some point it gets less and less. And I just remember, I'm that old now, yes. I was still a kid when Austria adopted the euro from the shilling, and that's a whole currency. That's a different animal than just one single coin. But still, I realized how emotionally attached people were to their currency. It was like it was really daunting for the people who was like, oh my god, we have a new currency and that strips us of our identity because now whole European Union has the same and our shilling is gone, our beloved currency and all of that. So there was a lot of emotions attached to that, which is interesting. Do you feel the same with the penny?
Before I jump in there, so what happened to the shilling? So if you had,
Yeah.
say, 500 shillings at
Yeah.
home, did you literally go to the bank and
You,
turn it
you
in?
went to the bank and turn it in, and then you got euros for
So
it.
if you didn't do that, are you sitting on a worthless piece of paper?
So it was, so you could go to the bank for years after that, and then the bank stopped accepting it, and then just the national bank, like the ECB, kind of basically where the Austrian national banks, in the different countries, were taking it back, which is a little bit more complicated to get there and all of that. And I think you can still change it if you find some,
Okay.
but it gets
Just
less
out
and
of curiosity,
less.
before we get into the penny thing.
And now it's like it's when somebody finds a shilling, and some people actually kept some as a keepsake and kind of framed them and all of that. So yeah, it's a pretty emotional stuff that was going on. So I want to ask you if you also keep a keepsake, or how are you thinking about the penny?
My mind goes to just like fiat cash currency anyway. Like everything. That question's interesting because 20 years ago, you might say, oh, yeah, this is like a big thing. But now everybody pays digitally. Like you go to Target or Walmart or wherever and you take your phone and you or you take your card and you tap it, or unless you're Keith.
I do. I like cash.
Right. But it says something more about the culture because, like Germans are very like cash, like cash is king. Right. So, it's a versus in the US, you go to some places for coffee and they don't even take cash.
They don't even take cash.
Like, it's unusual. So I don't know if there'll be a big impact or not, especially it'd be interesting to look at it by demographic, by age kind of cohort, because I would imagine young people
don't care that much.
Yeah, like they don't, probably will have no impact whatsoever. But interesting to think about.
It's funny you bring that up because growing up, it was always you go to a sporting event or a park or whatever, and you always worry about, do they actually take credit cards? Because you need to make sure you have cash. And now it's flipped.
Yeah.
Where it's like, I know they'll take a card, but I don't.
A lot of stadiums don't take cash.
Right. So we went to the zoo last weekend, and I naturally had to get some of the Dippin' Dots.
Mr. Health Nut over there.
But they only took card, right? Like they didn't accept cash at the Dippin' Dot stand. Which I thought was odd.
Strange.
But
Keith,
it is.
Do you keep a keepsake?
Probably not. I mean, what I found more interesting is that it costs 4 cents to make a penny, which
that's one of the reasons to kind of.
So I guess economically that makes a lot of sense to, if you're paying 4 cents to make something, it's like, how about we stop doing it, especially on the lowest denomination. Now it'll be interesting if that works its way up to the nickel, the dime, the quarter, because I think there's different metrics that you probably talk about as well. That I don't know. I mean, as much as I like cash, usually the coins are kind of smaller side of things,
Well, when did we start minting the penny? Because the reason I'm asking that is 1 cent 100 years ago was worth a lot more than 1 cent is worth today
because of inflation.
Because of inflation. So I think at some point you just start getting rid of like the ones,
Yeah.
1 cent, 5
That's what I
cent,
mean, you
and
get
like
the low
because
end.
there's just you can do the 9.99.
The dollars, the new penny.
Like exactly.
Right.
That's the
Well, they must have been minting them for a long time because what they had wheat pennies,
Yeah.
which wasn't that in like the early 1900s.
Yeah, I wonder what that does for the coin collecting. I suppose it makes it more valuable if you have coins, especially like the wheat. I remember
Right.
looking at when I was a kid, looking at coins, whether it was the wheat penny or some other different
Right.
things that you're or years of things. So
you think the last one they're gonna mint, they're gonna put something on it, something special,
yeah,
Probably.
or like
probably
some
Trump's head
special-
replaced
some
whoever's
special
on the
run.
penny.
Because when are they done with it? 2027.
2026, I think. I think
Okay.
they have like the the forms they're using, and when they're running out of those, then it's over. So it's sad that it's 2026.
Who's on the penny? Anybody know?
Lincoln.
That's what this is my guess too, but I'm not 100% sure on that.
Pretty positive.
All right. Guess that's an episode
I
for
mean-
next time.
I mean, it's interesting because as you said, like with the cash, that it's probably for most of the people, or especially younger people,
Mhm.
doesn't matter all that much. I mean, since I live in the US, I never, I think, saw one single penny. I don't actually know how it looks, to be honest, because I never pay cash basically. And went then with the dollars, and then you get some quarters back or whatever. But I actually never used it.
It's certainly changed even the last, I'd say 5 years, because I have, girls are in college, sons in high school at the end. It's when they're in high school, they, I'd always give them cash money whenever they're doing stuff. And he's never asked for money. It's just, he charges whatever. And I'm sure I pay for it at the other end of things. So, but it's never cash.
Yeah.
Yeah.
Venmo or
Yeah, exactly.
Cash App.
Yep.
And it's interesting because I think Kyle, you brought it up or Keith, you brought it up that it costs 4 cents to produce 1 penny. And last year in 2024, there were 3 billion pennies produced, and that cost $85 million.
Wow.
That is like insane. And now, when we go to the next smallest one, which will be the nickel, the nickel costs 13.78.
So we should
To
get rid of that one
produce.
first.
Mhm.
Right. And so my question is, when we get rid of the penny and then all the price tax tactics like 9.99, all of that has to go basically. If you accept cash, if you accept card, doesn't matter, because I heard they're still
pennies are still in circulation. It's just not minting them. So
right. But would maybe be the demand for nickels then increased, which is also very much more expensive than what it is worth, or what the worth
I don't
we
think
give it.
so.
I
It's going to take a while. Like
It's
to
probably
Tyler's
it,
point,
yeah.
that everybody's not going to just throw out their
Well,
pennies
again,
in a couple of years either.
Everything's digital,
Right.
So it's like you can still do the 9.99 just because it's
I would imagine
you don't need to worry about having the physical
Anybody have the
coins.
stats on how much cash versus like credit card for
No.
like just any like
I've seen a
GPV,
chart
like
on that before.
total payments?
I'll have to. I'll
I
find
assume
it.
it's a small number. It used to be obviously 100%. Now
Yeah.
we think sub 50%.
I bet you it's 40%.
Yeah,
Yeah.
I think you're right. I think it's somewhere around there, but
Mm.
there is a chart out there with it.
But I
So
heard
I'll
they
find
Stay
it.
tuned for next week's
Yeah.
episode when we
Yeah.
all these hot
we have to.
Deep
We have
cuts.
to-
yeah deep cuts.
But I heard with the credit card they still charge to the cent, so
Yeah.
it would be
Yeah.
just a change for cash payments.
Right. You'd think that they would go down. I mean, just the whole not accepting cash is kind of unusual in general, because you think about like the carriers like Visa, MasterCard,
Mhm.
all that backbone, and just accepting digital currency, Stripe payments. It's 2 to 3% of the cost to
Mhm.
actually transact that way. So you'd think that there would be like a deep rooted preference to accept
Yeah,
cash.
Mhm.
That's why, I mean, you do, and it's hard to track as well, right?
Right.
So the government and income taxes and the
Right,
cash,
right.
like if you pay like Tyler, maybe he could have paid someone for those steps that he couldn't build correctly. Could have paid him cash. Could have got done cheaper or something.
Yeah.
Yep, probably.
I mean, and other countries already stopped producing it, right? Canada stopped in 2012. Australia and New Zealand stopped their smallest coins.
Well, what did they do with the marketing tactics then? They go $9.95.
That's interesting. I didn't go that deep into it,
Hmm.
but I never heard anything about it. So I think the impacts are muted
Right.
because I never heard that before, that they stopped the penny before. So the
Hmm.
implication.
Wonder if they still have that sign of $9.99, but then when your total bill, when you buy all your items, all of a sudden they round it up or down, maybe
Mhm.
Yeah,
that way.
maybe there's some.
Mhm.
at the
Round
end.
it up a penny.
Yeah, whatever. Yeah, back to 10.
Mhm.
Anyway, so that discussion obviously needs a little bit more more information in the next podcast. A little deeper dive into all the mechanics of the penny. For the hot button topic today, I thought we'd talk a little bit about if financial education is working, because I saw some interesting charts and stats on that lately, which I'm really pleased of seeing, and I think it's really good news. So the thing is, the US ETFs this year have collectively gained around $437 billion in new assets just this year. And that all despite the volatility and despite everything that's going on in new money. And that's not just institutional money, but a whole lot of that is from retail investors who just, kind of started investing on their own and kind of informed themselves, which I thought is very interesting because it seems that they are getting more confident and kind of less confused or at least scared by market volatility. What do we think of that?
Tyler, go ahead.
I mean, I think you've got enough retail investors now that are well educated to continue buying, especially when you do get these types of volatility, or market declines. We always hear about buying the dip, and I think that's what you're literally seeing, because now it's so much more accessible today for retail investors to actually do that and buy ETFs or stocks or whatever it is, right? There's no fees on Schwab or whatever.
Yeah,
Fidelity.
brokerage fees, used to be $10,
So,
$15 a
exactly.
trade.
It's to trade a stock now, it's free. And so you don't have to worry about, I need to buy at least 100 shares to make my $10 cost
Commission,
to pay off, right? So
Mhm.
I just think retail investors can do it a lot easier now. And so the fact that they see a decline of 15%, I think they're just buying it and hoping to ride it out, which is what is great in my opinion.
Yeah, I think they're just a lot more informed than they used to be.
Mm-hmm.
The information's at their fingertips. There's podcasts like this or just their own research. And used to be, the retail investors, the uninformed investor. I think the information's out there now. They can become informed, and they're actually done the right thing recently. Is they bought this dip, which is we've had a 15% sell off followed by a 15% correction, whereas most institutional people are probably a little more scared off. And
but why do you think that is? Because that's a good point you brought up, because the institutional investors and sometimes the sophisticated or the smart money, and retail investors the dumb money, which I do not like the term at all. I think it's
a
not
common
true
phrase
anymore,
out there you hear, yeah.
but it's common. But they're the least bullish or the most bearish in 30 years. And they kind of stepped out of the game, a lot of them, and retail investors stepped in. So who's the dumb money now, it seems?
Yeah, and maybe it's the fact that institutional people have a lot more data, and then they maybe get themselves in the weeds too much instead of just taking kind of the broad picture. They're just really focused on stuff, whether it's globally or tariffs or taxes or policy, where maybe individual investors looking at their research on their individual ETF or stock, and that's what they're focused on, and they're not paying attention to all the other noise, which again, right now it's worked to their advantage, but at other point in time, there's probably the institutional investors has a lot of information, so it's now I like the fact, like you said, that people are buying this and becoming more informed and maybe less that's a bigger thing on the less panicking.
Yeah.
I think that was historically the case, where all of a sudden they'd see institutional investors kind of, you've seen these dips and kind of ride it out, whereas traditionally with the individual investors, and studies show what they chase performance up and they panic on the way down. Maybe we've seen a little bit of a mindset change. It'll be interesting if this holds or if this is more just kind of an anomaly in this period.
And the interesting thing is also, there's a little bit of a saying is like, okay, when retail investors get in and talk about it, then it's time for you to get out. But that seems to change as well.
Kyle, you got any thoughts on this whole institutional versus individual?
Yeah, I think there's kind of two things mulling about in my mind. Though one, as you were talking, was incentive alignment and timeframes. So, historically, I think it might be a little bit more education. Obviously, is helpful, and then institutional investors are, in general, targeting a 1-year performance for compensation reasons, for other things. So they might target longer term and incentives, but in general, it's that kind of short term swing. Whereas if you're investing your own money, you might say, okay, Warren Buffett, time arbitrage, we're gonna buy low, we're gonna hang on to this for 20 to 30 years and it'll be fine. And that alignment is very, very different and provides an edge to the retail investor, and if they're actually doing that. The other thing I think is interesting about the education comment is when you think about just online, like you go to X or Twitter or whatever, what I see
TikTok even, right?
TikTok, whatever. I do find it fascinating because there's such there are these echo chambers where I see it go through on my stuff, where you'll see like a whole flurry of dividend investing, and you'll see a whole flurry of this and and like Bitcoin and this and this and this. And there's these very distinct non-overlapping groups where they are just talking. No, Bitcoin to the moon, or
Mine is the
GameStop.
best,
Yeah,
my
mine's the best,
version,
whatever.
yeah.
We saw that with the meme stocks a couple years ago during COVID, where GameStop to the moon, right? And these very
Reddit boards,
boards, right? So it is interesting, the education, because it's almost like the snake eating its own tail, like this vicious cycle of you don't know what you don't know. And so I'm the jury's out on how educated the retail investor might be. Because it's like garbage in, garbage out, right? Like the quality of your research matters over the long period of time, I would say. So I don't know, those are the things that I think about.
No, that's a very good point actually from you, because it's like there's so much more information, right, with podcasts, blogs and everything, but there's also some black sheep out there, right, who just talk without really having a whole lot of knowledge or not the best thoughts, or and then it's like, okay, what do you believe? And it's hard to sometimes sift out the rights and the wrongs, basically, and you can get caught up or getting down the rabbit hole pretty quick when it comes to investing, and it can get pretty dangerous for for your financial future if you believe all of that blindly. But generally speaking, it's a lot more accessible, all the information. I mean, years back,
you just didn't have the access to it,
right? Like Keith, how did you like?
What are you trying to say about?
Well, yeah.
No.
Back in the stone tablet days, or what, Lisa?
Well, he does have an abacus on his desk. So
that didn't age well. No, but I was like, when you started investing or interested you were in that space,
it was hard to get information, right?
That was not really,
the internet was just barely starting, and the financial systems, there's like Bloomberg. There was really no facts that around at the point in time for institutional investors. Even institutional investors, you weren't getting intraday quotes. It was like midday and then end of the day, and it's just accessibility it's totally different. It's a game changer. Everybody's got on their phones or apps. You can pick up, look at your portfolio. You can see intraday performance. You can see good or bad. It's I think it's a good thing, and it's the people I come across, like back when I started, people weren't that interested. If you were interested in investments, you were, but if you weren't, you're not. And now, like, I'm meeting all kinds of people. I always ask, and they ask what I do, and I tell them, and they're like, "Oh, that's great. I got kids that do that, or friends, and there's a lot of questions, and they listen to. It's great for the subscribers that listen. Thank you guys." And there's also the other day I met an older person. Is like he was talking stocks. He didn't even know I did the business, and he's just like, "Oh, that's interesting." Then he started asking a bunch of questions. So there's all across the board, they're getting informed, which I think is great, from the young all the way to the old. And it's, like we always tell our advisors and our clients, the more informed advisors and clients that we have, the better off I think we all are, and just less of that panic. Maybe that's starting to set in.
Yeah, I mean, we were looking at cabinets this weekend too, and the lady that was designing the cabinets was trying to tell me about tariffs and
Yeah,
price
it's-
on cabinets, and Trump has extended it. I'm just saying, I didn't say anything. Like, I know, but
Yeah.
she went on this whole rant of Trump and tariffs, and it's like, great.
No, it's
But
Yeah.
well, okay. Let me ask you this. Sorry, I don't want to jump in and
No.
take your spotlight.
the bullying already.
Yeah. Thank you, Keith, for
But
pointing
because
that
of
out.
the accessibility, do you guys think? So we saw the V bottom for COVID. We didn't necessarily get like a full V bottom from 22, but it was a pretty quick snapback. And then we've got a V bottom so far for this one. Is that the reason for the V bottoms, is just the accessibility? You've got more retail investors just pushing money into it to keep the stocks from going down. Is that why we're seeing these V bottoms, or is there something that's just different than 2000, the dot-com bubble, the great financial crisis? Like, is there something inherently different now than it was back then?
Yeah, I'm not sure on that even, because it's the V. But I mean, yeah, we've had a quick sell off and a rebound. Now a V bottom of mine, we keep on going at this kind of pace. I'm not sure that's going to happen, so we'll see. I don't know why. Maybe it's part of the trading is no longer institutional trading. It's not even just groups like us putting our money to work and buying and selling this stock or ETF. It's computer trading. And I think that the rapidness of that and just the instantaneous information that, I mean, we're just talking about information is great, but I mean, the computer stuff is just like instantaneous. It's like they're making trades and they're, shaving off pennies and nickels on the trades, which we don't do that, but and I think that kind of has some impact on the overall market as well.
I think
That makes sense.
earnings too make a big difference. I mean, if you think about like a individual stock, many times like contrarian investing, you get this big crater in, for some styles of that, and then it can bounce around at the bottom for a long time. UNH would be a great example of a chart like that now, where it's fine and then it falls off the cliff, and it'll probably be a little while before it recovers. But if you match hundreds of securities within that, all those non-overlapping earnings sessions, I think, provide a cleaner climb out of those kind of holes when correlations kind of break,
Yeah.
So
Lisa, any thoughts on V bottoms or not?
No, overall, to Tyler's point, I mean, I think we saw the whole retail investing really stepping up in COVID times, when we saw the major sell-off, and then they were really, a lot of people were investing for the first time back then. A lot of them have stayed and kind of kept on investing. Why do you think that is? Was it because people were bored?
Nothing else to do.
I think that's part of it. I mean, like, I have a nephew that is just like trades all the time. It's just like crazy that I think part of that just because of they found the freedom to do it. They could start with a small amount, like Tyler's point.
They
There's
couldn't
no
spend
commissions.
their
It's
money
like,
anywhere else.
yeah,
so,
you couldn't spend it and say, okay. And then all of a sudden, social media, I think, drives a lot of this, whether it's, TikTok or what are these other ones. All of a sudden they get, you said, you get into a group that loves Tesla or Bitcoin or whatever. And the kind of, that's how it matches my thoughts. And that's kind of how you start investing.
I mean, COVID, like one of my best friends, he would send me pictures of CNBC because he was working from home, right? He's in Washington, D.C. He's got nothing else to do besides work, and in the background, he would have CNBC on. So then he would start asking about the stocks that they're talking about. Should I buy this? Should I not? Like that. I think that's what.
Was it Kramer?
Yeah.
He at least knew to stay away from the Kramer picks.
Tyler is the man behind Kramer. Is that what you're saying?
Yeah.
Everything he says tanks.
Yeah.
Yeah. There is on Twitter inverse Kramer.
Yes.
I think they stopped it, right?
Is it done?
It's performed very well.
Yeah.
Really?
But didn't they stopped it or discontinued the
I don't
ETF?
know.
I heard about something like that they discontinued it.
Maybe just in
I
Austria.
don't know if there's an ETF for it, but
there was an ETF.
Oh, really?
Yeah.
Wow.
Yeah.
I know people just tracked it.
Yeah.
Well, they do that with Pelosi as well.
Yeah. Yeah. What is it? Quiver Quant? Yeah.
Anywho, overall, I think a good development. I think because we at Gradient as well, we're talking for years and years trying to educate and getting out as much information as possible, because we think just that only an educated client is one that can make good financial decisions and not just trusting us blindly. But we want our clients to make informed decisions and know about the markets and what's going on. And we again, everyone like out there, like media and also us, say for years, like stay the course, diversify, right? Invest according to your risk profile, have a long-term perspective, and all that mantra over and over and over again. We see actually it bears fruit now, because with all of the developments with retail investors and generally, and we saw it as well, like in April, like peak volatility and all of that. We did not get a whole lot of calls, which was a little bit surprising, right? We expected a little bit more calls from advisors, from clients. We expected a little bit more nervousness, but we put out information timely, what's going on, and communicated properly, and we didn't really see a whole lot of nervousness, which is good.
Yeah.
Which is another example, I think, that this works, what we are trying to do for years, and communicating and educating and all of that.
Yeah, panicking is the worst worst investment. It's just terrible. It's just, you buy high, you sell low. It's just, if you can take that away from that, helps just a lot.
Yeah. I just want to finish this with what we did at Gradient Investments, right? Because we're like, we have all the information necessary, sometimes a little bit too much information. So in April or whatever, did we panic? Tyler, did we panic?
No.
That's
Absolutely
great.
not.
And generally, how did we deal with the uncertainty in April? Like, what did we do? What did we not do, Keith?
Yeah, I think that's the time when you sell these kind of, or when you see these big sell-offs, you kind of gradually put money back into if you have money on the sidelines or kind of the more defensive position, you kind of rotate some of those into the more offensive. And that's kind of what we did, on different portfolios. And again, you weren't panicking on the way down either. So you probably weren't selling a bunch and then rebuying it back. So you can avoid that. And generally I think all of us believe in buying higher quality, long-term winners, more lower turnover, right? So it's like, if you have lower turnover, you stick with those names that are selling off. And then, oh, by the way, if you do have some of that extra cash in the sidelines or more defensive, those are the times you start rotating back into the market. Now I think the market's rebounded. And I think year to date, S&P's up about 2% as of this podcast. So we're on track for that kind of normalized year. It doesn't feel like it. And now that's another whole segment at a different time, is it certainly doesn't feel like we're up 2% with all the news flow in the market this year, does it?
So that, I think that proves that we walk our talk. I think that we are not the institutionals who are the most bearish in years.
No.
That's great. Kyle, any finishing thoughts on that?
No, I think Keith said it well.
Awesome. So let's end it with spaghetti wall then. I brought something new today. I hope you like it. And I hope you didn't cheat before.
Tyler.
It's already. He's like, oh my God, I'm gone.
I didn't even realize this was down here.
Oh.
It's Lisa's pages of notes. That's why.
Yeah, that's a little bit more.
No one can get through to the bottom.
So I will tell you some tickers and some companies and what they're doing. And you tell me if it's a real company or if it's a scam, basically,
right.
Not existing. Okay, ready? Wags Inc. Pet tech company.
What's the ticker?
WAGC.
Wags, huh? Okay.
Wags.
We're supposed to say that's a real company or not? Is that
yeah.
around the table?
You tell me it's a pet tech company, and you tell me if it's real or if I just make that up.
Pet tech. What does that even mean?
Like, all the
Probably
automatic
like
feeders and all of that.
Oh, yeah.
And
Okay.
kind of the
All right.
chips and.
All right.
And
I'll start. I'll say that
cameras.
one's real.
I'll go with real.
I'm gonna say real too.
I got you with the first one. It's
Whoa.
not a real company.
Oh, really?
Boy.
Yeah, I made it up.
Whoa.
Nice job.
Next one, ticker boom, DMC Global. It's an explosion welded metal company. So they weld metal with explosions.
Sounds awesome. but
I mean,
fake.
the ticker is
Ted,
boom.
Kyle starting. He's saying fake.
You think it's fake?
I think it sounds like a great idea, but I don't think it's real.
I'm gonna go with real. Might as well. Might as
I'm
well.
saying not. No.
It's real.
Dang, yes.
Yeah.
Wow. Tyler won. Kyle Keith.
I
0.
thought I got you with that one. Then the next one is Snack, ticker SNAK, Snackable Brands Inc., which is obviously a snack company with different snacks.
Tyler, you want to
I'm
start?
going with fake.
That's real.
I'm gonna go fake.
It's fake.
Boy, Keith over 3.
The next one is Body. The ticker's Body. The name is the Beach Body Company. It's a fitness and well-being company with supplements. And all
I'll
of
go
that
first
stuff.
again since I'm so hot. I'm gonna.
Mm-hmm.
This absolutely sounds ridiculous, and I'm saying it's fake, but I'm gonna be wrong.
This
so
is
I'm-
inverse Keith now.
Yeah.
I'm going
Is
real.
this inverse key?
yeah.
I'm
So you're going
real.
with real? Real. It's real.
Yeah.
0 for 4. Nice.
It didn't age well, but it's real.
Yeah.
And the next one is Grip. Ticker is Grip. Grip Tech Robotics. It's a warehouse automation company.
I'll let you two go first so I can get one right.
I'm gonna go with real.
I'm gonna go with fake.
It's real.
It's fake.
Dang it!
0 for 5. Wow, you can't even make that up.
Inverse Keith is
Yeah.
really going strong.
Good thing I don't invest in these kind of companies.
Yeah.
So yeah, it was just a little bit something different.
That was
but I got you on that one.
Embarrassing.
I guess. We will practice a little bit more.
Thanks,
on
Lisa,
these.
before you go on vacation. Perfect.
Yeah.
Thank you. Well, guys, see you next week. Until
Well,
then, take
you
care.
not so much.
No, I'm not so much.
Yeah.
I will watch the episode with an Aperol spritz in my hand.
Okay.
if
Oh,
that- yeah.
perfect.